rise of digital currencies. Keep an eye on monetary policies and capital controls that could impact financial freedom. How to prepare for financial collapse. If the financial system is truly at risk, what can we do about it? Rickards provides several key recommendations to protect your wealth and future. Diversification is key. Relying solely on fiat currency or the stock market is risky. Rickards recommends a mix of assets, including gold, silver, real estate, and even fine art, as stores of value that can withstand economic turbulence. A well-diversified portfolio helps to minimize risk. During the 2008 financial crisis, while stock markets plummeted, gold prices soared over 150% in the following years, proving its role as a safe haven. Many financial experts now suggest allocating at least 10 to 20% of investment portfolios into tangible assets like gold and real estate. Reduce dependence on banks. During a financial crisis, banks may freeze withdrawals, limit access to funds, or even collapse. Having cash reserves and alternative forms of wealth can help you stay financially secure. In 2013, the Cyprus banking crisis saw citizens wake up to find their bank accounts frozen and withdrawals restricted. The government seized up to 10% of deposits in a controversial bailout measure. This event highlighted the risks of keeping all assets within the traditional banking system. Invest in hard assets. Rickards suggests that tangible assets hold value better than paper money during times of financial instability. Gold has been the go-to asset for centuries, but silver, farmland, and commodities like oil and timber are also strong stores of value. In 2022, as inflation soared, global demand for gold surged by 18%, with central banks purchasing the highest amount in over 50 years. This trend signals a move away from fiat currencies toward real, physical assets. Be wary of government intervention. When economies collapse, governments often implement strict capital controls, such as restricting money movement, freezing bank accounts, or increasing taxation. Understanding these risks can help individuals and businesses make smarter financial decisions. For example, during the 2001 Argentine financial crisis, bank withdrawals were restricted to $250 per week, causing widespread panic. Many who had stored assets outside the banking system were better able to survive the crisis. Consider alternative currencies. With fiat currencies at risk, some experts advocate for using alternative currencies such as Bitcoin and decentralized digital assets. Cryptocurrencies have grown into a legitimate hedge against inflation and central bank policies. In 2021, Bitcoin was called digital gold after reaching a market cap of $1 trillion. While still volatile, it has gained mainstream acceptance as a potential alternative to traditional banking. However, Rickards warns that governments could attempt to regulate or ban cryptocurrencies to maintain control. Store emergency supplies. A financial collapse doesn't just impact your wealth. It affects everyday necessities. Supply chain disruptions can lead to food shortages, higher prices, and loss of essential services. Preparing with emergency supplies like food, water, and medical necessities can be critical. During the COVID-19 pandemic, supply chain bottlenecks caused food inflation to rise over 30% in some regions. Having a 3 to 6 month supply of essentials can provide security in uncertain times. Invest in skills, not just assets. Beyond money, skills are an essential investment. In a crisis, those with self-sufficiency skills, such as farming, mechanics, or even coding, can create alternative sources of income and security. History has shown that during economic downturns, those with adaptable skills thrive. In the 1930s, Great Depression, bartering and trade became essential. People with practical skills were able to sustain themselves even as traditional jobs disappeared. Keep an eye on geopolitical risks. Economic collapses are often tied to geopolitical events. Wars, trade disputes, and political instability can accelerate financial crises. Keeping informed and staying ahead of global trends is crucial. For instance, the Russia-Ukraine war in 2022 led to major disruptions in energy markets, pushing oil prices to over $120 per barrel and accelerating inflation worldwide. Understanding these global shifts can help individuals make smarter investment and security decisions. Visuals, scenes of bank runs, gold investment charts, people storing emergency cash, wartime economic shifts. The global economy is changing, and the death of money warns us of the dangers ahead. But with the right knowledge and preparation, we can navigate these uncertain times. Subscribe for more deep dive financial and economic insights. Do you think the financial system is on the verge of collapse, or will it adapt? Let us know in the comments. Next episode, another must-read book, The Prince by Niccolo Machiavelli.